Hey guys, this is Money Value. My name is Olga and I'm back with a new analysis. We've already covered such giants as Google, Tesla, Apple and many others. And now it's time to look into JPMorgan Chase, the biggest US bank by market value. Their stock price is almost $132 as for now and the market capitalization is over $405 billion. So, what was going on with JPM stock in 2020? In the second part of the year, the best characteristic would be choppy. It fell really low in March, but then it managed to recover. As you can see, the share started growing in November with a $123.60 entry, then the buy range extended to $129.78. As you can see, now the numbers are even higher. It is one of America's big four banks, along with Bank of America, Citigroup and Wells Fargo. And while we are on the topic of ratings, the hedge fund unit of JPMorgan Chase is the third largest hedge fund in the world. $45 billion in assets under management. Now a little history, and I'll be quick here. JPMorgan Chase, as you know, it is the result of combination of several banking companies: Chase Manhattan Bank, JPMorgan & Company, Bank One, Bear Stearns, and Washington Mutual. It has other predecessors, the oldest of which is the Bank of the Manhattan Company. Here is the picture showing the whole history. As you can see, it's huge, so let's keep it and get to something closer to our days, to 2019. Bitcoin is probably the most famous cryptocurrency, and we would say, what the hell is it doing in the video about bank? The thing is, almost 2 years ago, in February, JPMorgan announced the launch of JPM coin. It's the first cryptocurrency issued by a United States bank. Not Bitcoin, but still. Yet, if you want to buy it, I'm gonna stop you right here. It runs on a privately commissioned blockchain and isn't available for everyone. And as every huge company, they have a spot on their reputation. About half a year ago, in September, they admitted that they have manipulated precious metals, futures, and government bond market for 8 years. No facing criminal charges, fortunately, but they had to enter into a deferred prosecution agreement. The settlement with the United States Department of Justice, US Securities and Exchange Commission, and the Commodity Futures Trading Commission cost them $920 million. But look at the financial data. I mean, almost $1 billion is a lot, but maybe it wasn't too hard on them after all. Oh, and in 2020, it ranked 17 on Fortune 500 rankings of the largest United States corporations by total revenue. It still can be harmed by the coronavirus situation that jeopardizes the global economy, and there is a good chance that new regulations on the financial sector under Joe Biden, White House, and Democratic Congress might not be as much of a help. But trust to be told, they probably won't be as tough as those passed in the wake of the 2008 financial crisis. But in spite of all the difficulties, the fourth quarter report looks pretty good. The bank's return on shareholders' equity was 19%. Analysts expect JPMorgan earnings per share to be $2.72, up 6% versus a year earlier, with revenue rising 3% to $29.28 billion. In reality, which is even better than the hopes, earnings per share were $3.07 on revenue of $30.16 billion. Now, they expect JPMorgan earnings to grow 25% next year. Its fourth quarter profits jumped by 42% from a year earlier, as the firm's investment banking division had a stellar quarter and its balance sheet improved despite the pandemic. It was mostly thanks to trading and investment banking, as revenue in business banking and credit cards fell. Now let's see how they've made it and discuss the quarter 4 report a bit. Their consumer and community banking brought them $4.3 billion of net income, up 3%. As for the net revenue, it decreased 8%, making $12.7 billion. Because of the impact of deposit margin compression, consumer and business banking net revenue was $5.7 billion, down 14%. Other lines are home lending that brought them $1.5 billion and card and auto was $5.5 billion. The last one decreased 7% due to lower card net interest income on lower balances. We're moving on to the corporate and investment bank, with a net income of $5.3 billion, up 82%. Banking revenue was $4.1 billion, up 16%. Investment banking revenue was $2.5 billion, up 37%. The reason is in higher investment banking fees, up 34%. As for the market and security services revenue, it was $7.2 billion, up 18%. The next one is commercial banking. Net income was $2 billion, up 115%. The increase is mostly explained by reserve releases. Higher deposit balances and fees resulted in net revenue growing 7%, up to 2.5 billion. We have two things left: asset and wealth management that brought 786 million, down 2% of net income, and corporate with a net loss of 358 million. To compare, it was 361 million a year ago. As you can see, JPMorgan showed strong results in the fourth quarter. It was a challenging year, but they managed to generate record revenue. Now, I'm just gonna quote CEO Jamie Dimon. While positive vaccine and stimulus developments contributed to these reserve releases this quarter, our credit reserves of over 30 billion continue to reflect significant near-term economic uncertainty. As for the next year, the bank plans to buy back 30 billion in shares. On the December 18th, Fed published the results of their stress test of the banking sector and concluded that banks could continue to lend to households and businesses even during a sharply adverse future turn in the economy. Earlier in the year, the Fed suspended buybacks to make sure banks could retain cash, but now they made it possible again, with some limitations, of course. To me, JPMorgan is a long-term investment opportunity. The returns the bank is earning are very good, or as analysts say, in the range that can be sustainable competitive advantage. But last year was also the time when the bank drew attention of the press, mainly by the report that the bank reversed money from the loan loss reserve. The headline for the Financial Times reads, JPMorgan reverses 3 billion of loan loss charges, and the Wall Street Journal has a similar heading, JPMorgan profit soars 42% after bank releases reverses for bad loans. As a result, JPM posted its highest ever quarterly profit after releasing 2.9 billion in funds it had aside to cover soured loans. The thing is, JPMorgan took more than 11 billion of credit charges in the first 3 quarters. It was because of the uncertainty around pandemic. It might have resulted in large defaults of the borrowers. Trust to be told, they made a lot of effort to estimate what amount of reserves would be optional. The bank has credit reserves of 30 billion. Mr. Diamond is confident the best efforts are being made by the bank to estimate what is needed, and so moves on to other areas of the bank. The CEO is very confident about the future. It can be proven by the fact that he proposed to the board a program for the bank to set aside 30 billion to buy back its stock. According to that plan, they will buy back 3.2 billion worth of stock in the first quarter of 2021. However, they still have several uncertainties to deal with. We never know what the next year holds and what 2020 taught us to be ready for anything. Now let's talk a bit about another huge bank I've mentioned in the very beginning, Citigroup, just to let you compare them. Let me know what you think about it in the comments. So, their market capitalization is a bit over 126 billion, definitely less than JPMorgan's, more than 3 times less actually. Their share price is not very stable. It fell in March like JPMorgan's and in autumn, but then started growing, reaching $81. But now its price is $60. This company definitely underperformed both the US banks and US market. In comparison to Citigroup, JPMorgan sounds even better. Anyway, I strongly believe that JPMorgan is a leader in the area and it sets out the direction for other banks, especially in how to prepare for the future, including digital payments. If you ask me, I'd say it's buy and hold, but I've gotta add, it's just my opinion, it doesn't mean you've gotta rush and buy it now. If you're interested, I've got some interesting facts about this company, or to be more accurate, about JPMorgan, the banker. He was the head of the banking firm that ultimately became known as JPMorgan and Company. They're historical but not boring, I promise. First one, do you know what Morganization is? Well, JPMorgan was famed for taking over failing businesses, then they reorganized them and made them more profitable. It happens so often that the whole process got a name similar to the company's. Now to some more famous words. Here's a quote we've probably heard. If you have to ask how much it costs, you can't afford it. It belongs to JPMorgan himself. Let me know what you think about it. And the last one. JPMorgan is lucky. I'm not talking about luck is the key to success, he just evaded death. As an owner of White Star Line, he was supposed to get on the Titanic, but he didn't go and decided to stay in France on holiday. Well, we all die anyway, and when it happened to him in 1913, the NYSE shut for 2 hours, so that you know, usually it's only down for US presidents. Well, that's all I've got for you for today. Let me know if it was new information for you. Don't forget to hit the like button, subscribe, and share this video with your friends. Stay tuned, I'll see you soon.